Starting right now.
All right.
Hello, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition, the day that we're all going to get out there and go protest. And, well, I hope your day is going well. I hope your day is going better than Von Miller's day. I don't know if you guys saw Von Miller trending on Twitter and social media, but my goodness, buddy, you probably better just to keep your mouth shut on some of these issues. But we won't make it a sports show. We'll make it a markets and currencies type of show. I see we got some new faces out there today. So hello, Ms. Knock, and Ross Lovin. Always love to get some loving on the show. We also have Alex with us, Big Ab, Simon, Daryl, Ivzy. Good to see you, Jorge, as well. So good to have everybody with us. And, of course, I can't forget Richard, he was one of the first ones in the room today. All right, the topic du jour is going to be really global currencies. We'll look at the euro, we'll look at the pound, and, of course, the dollar. But I start off with the title, as I like to do for most of these shows. Brexit, done deal! I have this nice exclamation point as well as a question mark because for the better part of the last 4 years, it has been this what the hell is going on type of attitude from the UK as well as the European Union. So we have some semblance of a deal. People agreed to something, but like Seinfeld said, it's a show about nothing. Nothing has really been decided there. So we'll look at that. We'll look at the charts. And of course, here to help me is none other than Mr. David Warner joining us. Hey, David, how you doing?
I'm doing well, thanks, Merlin. Good to be here again.
Whoop whoop! You know what? It's been 2 months, buddy. I'm a little disappointed.
Dude, I'll be on your show whenever, man. I enjoy doing it. Anytime you want to talk currencies, you got a guy right here.
All right, I'm trying to get the on like a monthly rotation. So
please, yeah.
Well, actually, you know what it was? We actually did one year. We did a showcase, a signature series showcase for you in December. So technically, you and I worked together in December. So that's good.
We did, yeah.
All right,
2021 we'll do it a lot more.
A better year. Let's do it. Right. Let's talk about Brexit. Obviously, you have been following it much closer than I have because the pound, as you were emphatic about it back in November, is your favorite currency pair right now. You're loving it. What's your thoughts on what's going down with the Brexit deal?
You know, I have been waiting for that deal for so long. I feel like I was just a broken record, always talking about a Brexit deal. I'm like, we're definitely going to get this deal. And we did get it. We got like a deal that's not really a deal. Is the joke you made about, Seinfeld is just kind of a deal about nothing. And I feel in a lot of ways, I feel like it was like, there's still a lot of things that they have to figure out. Like the deal was like 1,200 pages, like basically signed in like the last hour that they could do it. And it leaves very little mention about things like financial services, which make a huge part of the UK economy and a big tax revenue for them. But, the pound, I still, it's going to be prone to kind of crazy headline. I think just like the headlines that come out of Brexit, because there's still going to be a lot of arguing back and forth. Mm-hmm. But, it's one of those currencies that I'm more interested in buying than selling. I'll share a screen with you.
Yeah, bring it on.
Let's see here. Actually, let me move it to the other side. Hold on. Give me a second. Sorry, buddy.
No worries.
So, here is, can you see it?
Yep. Looking good.
So here's the pound versus the dollar. And I actually, what I did before I came on your show this time is I was just kind of plotting out just kind of the way that I'm going to kind of look at it kind of on the big picture. So like,
wait a minute. Are you telling me that you prepared for today's show?
I did. I know. What?
2020 is off to a good start.
This is off to a great start. Yeah, prepared to be on your show. And I did it with a lot of just the pound crosses. And, basically just looking at, pound crosses, basically kind of almost like a dime to a nickel. So if you look at the red numbers, the red lines, those are dimes, and the purple lines are the nickels. Or, oops, this one should be a red one as well. Excuse me. I guess I wasn't totally prepared, but...
Hey, better than normal, right?
Better than normal, yeah. So this is like one of those currencies that really for the whole year of 2020, I was only really on the buying side. And so it's like, it's just like buy at one of these big round figures and try to get to the next. And, the pound currencies, this is what my plan is kind of going into 2021. So it's like, 130 to 135. Now I'm on the journey of 135 to 140. So there's 500 pips in between those two levels. And then basically it's always getting in at a whole number, getting out at a whole number. So like using 50 pip stops. And then it's like I got basically 10 shots, and, past performance, not necessarily indicative, whatever that whole line is. But, if I do something 1 out of 10 times, I feel like I have a pretty good chance of being right a couple times. I'm looking at it the same way for like something like a pound yen. The pound yen is actually the one that I'm a little bit more excited about going into 2021, because the Bank of Japan has recently just kind of been beating its drum about a possible currency intervention, and they've been trying to basically talk down the value. They're trying to talk down the value of the Japanese yen, trying to weaken it. And one of the things I like about Japan is they're actually one of these central banks that actually target exchange rates. So like they're looking at the dollar yen, and basically they're like, we'll protect, 100 yen to the dollar, which is trading at about probably 102.50, 103 right now. But I just prefer kind of, I probably, if I'm going to buy things next year, the probably the place where I feel the safest, even just right now, is like kind of going against the Japanese yen. So if I had to choose between pound dollar and pound yen, I would be going with the pound yen. Only be looking for buys. You're kind of right around that 140 figure now. You can see it's like these are daily candles. The time frame really does not matter that much, but the fact that we're just start camping out on the other side of 140, I like it. So like if it gets below 140, I just leave it alone. I could try to buy it here again, or it's got to get back above 140. And then you're just trying the whole 140 to 145. But that's the way I play it, man. Only buys. I'm only be buying pound. I'll never try to look for a sell until something just completely falls apart on the Brexit.
Yeah, I was gonna say never. Like, stay on these two charts. Like, actually, go back there.
Sorry,
No, yeah. I want to do it while you're driving, or I can drive on my side. But
no, that's okay. I got it.
One of the questions I have for you, which I think is important for all the viewers and listeners right now, is when we look at these two charts, you had the British pound, Japanese yen there. I want everyone to notice kind of the formation of that chart, what the structure of it looks like over the past few months. Now, for me, it's important to look at because I'm looking at it from a perspective of strength. You'll notice that it hasn't broken that 2020 high, whereas if I look at the British pound US dollar, it has broken. That said, when you're looking at buying long, yes, I understand that your optimism for the British pound. They're both in beautiful uptrends right now, certainly since the March lows. But if for me personally, I think I would be more inclined to go with the British pound US dollar because the trend looks to be stronger. Does that factor into your analysis at all? Is the strength relative to another currency pair?
I started to get kind of scared of, I'm starting to kind of, hold on, let me get back to, where'd my pound dollar chart go? I'm really starting to get scared of the dollar. If I even just kind of pull up the dollar index, and it's just like, I just feel like I'm starting to get nervous around the dollar. I know, like, the dollar has just been on this crazy downtrend. I've been getting scared of like the stock market. I've been getting scared of the dollar just by how fast they've been moving lately. So I just always, I feel it's like as soon as I start trading again, I'll get that knee-jerk reaction where they kind of start moving in the opposite direction. But, I've been looking, you look at the dollar index, and instead of kind of looking at it basically, 500 pips at a time, when I'm looking at the dollar index, basically just start counting by ones. So it's like 93 to 92, 92 to 91. And right now, the only way that I'm interested in kind of starting to buy dollar pairs again is that it's kind of reverse and kind of get back, look like it's kind of trying to climb back one of these numbers. And I don't know if this is making sense, but like that's kind of the way that I'm looking at it. I mean, I've been missing out on some of the dollar. I want to say missing out, but I haven't been taking as many dollar trades. Probably the one that has looked the most attractive, I'll pull this one up here, is like this New Zealand dollar. Shoot, I was. Were you looking at my pound? I
I've
was
got your
trying
British
to.
pound Japanese yen up.
Shoot, I was doing the news. I was talking about the dollar index when I had that chart up.
No worries,
Anyways,
no worries.
so I guess I wasn't as prepared as I thought I was. But anyways,
The
you
peril
know,
of having multiple monitors, buddy.
yeah, I know. I have. Yeah, exactly. So, anyways, the way that I'm playing even the dollar index, it's just the same thing of just like basically counting.
Yeah.
92 to 91, 91 to 90, and then basically it's 90 to 89. But it's always getting in at a round figure and getting out at a round figure. I'm either counting by ones, counting by tens, counting by hundreds, counting by whatever, or you're counting by quarters. It could be 25 cents to 50 cents, $2.50 to 5, 25 to 50, things along those lines. It just kind of depends on the instrument. But in order for the dollar to it's tough, man. It's in such a crazy downtrend. And the way that the market's looking at it, there's kind of like the way that they're interpreting, the way you read about it, it's like there's no end in sight. Like the stock market's going to double in time tomorrow. And the dollar is dead and all this kind of stuff. So,
well, I mean, and we've got people in chat here. Big Eb says dollar's going to crater. Joe and Janet are sending trillions soon. I don't think it's a question of it's going to crater. It's cratering. I mean,
cratering.
It's cratering. I've got the monthly chart up here, and I did a couple things just to put it into perspective because I know that a lot of you watching this right now might not be thinking this in terms of your purchasing power. When you look at that dollar chart, that's a reflection of your money being able to buy goods around the world. And you'll see here on this monthly chart that I have up, since January 1st of 2020, so just a little over a year, the dollar's dropped about 8.35%. That's a dollar index, which means that your dollar has lost about 8% purchasing power. And that may not seem like a lot to you because you see something like, Bitcoin moving 30% a day, but this is way bigger. Remember, this is supposed to be an unbelievably stable supply. This is supposed to be something that is, one of the principles of real money is it's going to be a stable store of value. And I would argue that 8% drop in a year is not really a stable store of value. Now, when I pull this out to a daily, you'll see a much more dramatic sell-off. Obviously, this is just brutal. And that's not even including the highs we experienced back in March. But this is pretty ugly for us. And, I thought it was kind of funny where David said market's going to double tomorrow. Well, you know what? If the dollar drops from 89 and gets down to 50, yeah, markets may double. I mean, the more that the dollar drops, the stronger the equity markets will be. Because remember, any foreigner can come in and buy twice as much if it goes, drops 50% on the US dollar index. So this is, one of the key things here that's driving most of these currency pairs that are based in the dollar down. And if they are in the cross pairs or in the dollar's the second part of the pair, you're seeing those rise significantly. So it's critical for me that if you're trading this dollar, the trend is your friend at this point, which is why I looked at that British pound USD chart and liked it just a little bit better. Even though I agree with you, it's getting a little long in the tooth. But hey, the trend is your friend until the bend at the end, right?
Yeah, no, I'm still playing both. I just the thing is that hold on, let me see if I can share again here because shoot, I don't know if I lost it. Here I go.
Zhu Juang says it's great. He says, but looking at that chart, is it never stable? That's a great point. And yes, what I'm saying here is it's not that we ever expect it to be just totally horizontal, right? But what we don't want to have look at the rate of change. Yes, it's had some pretty volatile swings, but it usually should not be moving 8% in a year. That's a pretty large amount. But you're right, Zoo. It's not the store of value that we are led to believe that it is. Of course, we know that's because the Fed and central bankers clearly manipulating the rates. All right, David is back. Let me bring his screen up there. All right, I got your full screen of the New Zealand dollar. What you got?
Yeah, so here's the New Zealand dollar, which is essentially New Zealand dollar and the Australian dollar against the U.S. dollar. Those have both essentially become the stock market of the currency market. So really whatever the stock market is doing, you can pretty much do the same thing to the New Zealand dollar. So these currencies, New Zealand and Australia, not if when, the markets have their corrections, whenever that is coming, the way that the market's been moving, I feel like when it does, it may be pretty scary, but
Mm-hmm.
You want to talk about just an appreciation. You can see since the bottom of March, this currency pair has gained 11%. We've gotten 9.73% in the last 3 months. We're over a 4% gain, if you can see that right now,
Yeah.
just in the last month. So you want to talk about just an elastic band that's been pulled and pulled. And I'll tell you, like Australia and New Zealand are not necessarily not central banks that typically like strong currencies. You have Bank of Japan already beating their intervention drum. Excuse me. I feel like it's just a matter of time before the Reserve Bank of New Zealand, Reserve Bank of Australia, they may start trying to talk down their currency appreciation as well. But you can just the way that you look at it. If you're just continually bullish on equities and you're just really just a dog bear, the New Zealand dollar and the Australian dollar typically are the best performing currencies with that type of mentality. And you look at the way New Zealand has been trading, it's just like since the 55 cents, just 55 to 60, 60 to 65. Now you have 65 to 70. And now basically it's 70 to 75 cents. In a lot of my trading, I don't, as you've seen and as you know, and it's like I'm not really a person that really looks left. So I don't really kind of look and just try to see, what kind of where we're going to try to turn this around. It's just like, I'm just more focused on this is what's going on now. You got 70 next hurdle. We just got to touch this 75 and then just kind of see how it reacts to there. But again, it's like this is just the biggest, even in 2021. I mean, I'm just trying everything, keep it as simple as I possibly can. But the risk reward, just trading this whole like dime to nickel, dime to nickel, dime to nickel, 50 pip stops, always getting in at one number, getting out of the other does make things pretty simple.
Absolutely. It makes it much simpler, and I think that's one of the reasons a lot of people like it. For those that don't know, David does a signature series for Online Trading Academy. He's doing one, I think it starts coming up here soon, right?
Yeah, it's next week, next Tuesday. This will be my first one, of the new year. So I think it's going to be an exciting year. I'm very interested to see what this year brings us. I think, I don't really know what's going to happen, but I think we'll probably get the way that, politics are, the way that the central banks are. Now we're getting into, an administration that loves to just like print and spend money. There's a very good chance, that this market just continues to do what it does until basically the Fed steps in, says that there's too much inflation and they start raising rates and tightening the money supply again. But until then, the market has no real reason to go anywhere but, rather than up. That's all the only direction it has to go until something comes out of left field. Really, this is what it is.
Speaking of left field, I mean, we do have a little bit of idiocracy going on in Washington, D.C. today with people storming. Yeah. So who knows what that'll transpire to. Hopefully it won't. Hopefully they'll nip that one in the bud real quick and shut it down. But
I was surprised even with just that. I thought that we would have gotten even just a little bit more of a knee-jerk reaction out of the equity markets. And like the dollar, I thought, okay, well, this is it. This is the catalyst the dollar's going to need for it's going to be a short period of time, but they'll get something. But it lasted like no time whatsoever. Then all of a sudden, these currencies just are right on their pace again.
Yeah, for those that may have missed it, I bought a few puts on the Russell 2000 today for May 21st, and I'll bring up the. Well, it's just going out a few months. I'm not loading the boat like I did back in April. That's for damn sure. But it was interesting because right as we broke above that 206 on IWM, I'm like, all right, I'll buy some puts, and I know they're long term, so I give myself some time. I bought the 180s, by the way, for those that are asking and that want to know. It was interesting because that's when they said that there was the shooting inside the Capitol building, and you see notice the market reacted very quickly on that one. But you're right, it pretty much shrugged it off. And this, if you look at this chart of the Russell 2000 today, intraday, it is unbelievable. You very rarely see a market index do what the Russell did today. Of course, finishing up over 4%. At one point, it was almost up 6%. You notice this 15-minute chart I have here of the Russell. Up until it sold off aggressively, which I think this is all going to be on Pacific time, that was right around 11 o'clock. It only had one 15-minute period where it was down. It was nothing but up since then. Pretty crazy.
I don't know what this, It's just like how much longer, how much faster can how long can this just continue to do what it's doing without just some type of correction.
Mm-hmm.
It's just like it's this whole, you have this FOMO, fear of missing out, where you just want to kind of chase it higher, but it seems at the same time it's just like, okay, if I do this, I'm buying it again at like the most expensive price that anybody's ever paid in the history of time. I
Yeah.
remember our conversations. This was even years ago when you're in the kind of the cryptocurrencies, Bitcoin, and like
What do
I
you mean
just never
was, buddy? I
really.
still am.
I know you are. I know you are. But it's like when you were, I don't know if you remember these conversations, but you're like, you got to get into this, get into this. And now I look at where Bitcoin is now and what it's doing, and I'm like, oh my God. If only, if only you could just turn back time just a couple of years, how much money I'd have today.
Well, it's three words that mean absolutely nothing in our world, right? Should have, could have, and would have. So don't worry about that
I know.
aspect
I
of it.
know. I know.
So you're not doing anything in cryptocurrencies?
I haven't, and I honestly, like, now I've been watching it and I kind of track it, but the same thing. It's like I would love to get in, but I'm gonna need. I feel like I'm gonna need some dips before I feel comfortable.
Yeah. Well, we can talk about the dips and how those might be handled later on. Let me go to two listener questions here that came in. One I think we've already covered. Tran says, I'm in a micro lot of the British pound, so obviously a very small position, and was curious when you would get out. Now, Tran and others, when you send in questions like this, it actually really helps us a lot if you state, here's my entry, my stop loss, my price target. Those three things everybody should have in their head or written down every time they make a trade. So you're not really giving them much information, but let's assume that someone were to be long right now that British pound, GBP USD. I'll bring it up here on the daily time frame.
I just pulled up mine. I have my lines still on there.
All right, well, I'll go to your chart then. So,
Oh, sorry.
Where would you get out of this one?
Well, listen, just the way that I trade, it's always basically a price point to price point. So I'd like to get an idea of when he got out. But if I was looking at a big picture like this, I would say, listen, why not aim for the 140? But otherwise, basically, it's typically if I'm not counting by like nickels, the way that you're seeing right now, you can kind of look at it a penny at a time. So it would be like $1.35 to $1.36, $1.36 to $1.37, $1.37 to $1.28.
Mm-hmm.
But a lot of that has to do with just the way that he's managing his risk. Like the risk to reward has to be there to kind of, if I'm only aiming for whole numbers, I was basically counting by ones at a time. Typically, your stop is somewhere between 20 and 25 pips. But if he's sitting with a 50 pip plus stop, he can't really kind of trade this by counting by ones. But on kind of the shorter term intraday, that typically becomes a little bit more of my focus. So it's like 36 to 37 or 36 to 35. Sometimes it takes a day to complete the penny. Sometimes it takes a couple days to complete the penny. But when you're trading pound crosses, typically, those type of trades, when you're going from penny to penny, don't last any more than a day or two. So it really depends on his focus. But the thing is, like, now that we've kind of broken through 135, you're going to have a lot of the headlines that come out of, I don't know when the Brexit chatter and all that kind of starts again. But if I look at just this space from 135 to 140, there's really nothing here.
Right.
So it's just kind of a free fall. So I don't imagine much resistance through this, but we'll see.
I'm with you, and I actually it's funny because I was doing a similar art project over on my side. So here's my platform, and here's your British pound on the weekly, and I just put a simple yellow box on this trend to see where we are, what's above us. And if you notice off the left-hand side of this yellow box, there isn't really anything of interest with regards to a zone that I would be interested in. So David does a whole number thing, which I think is great. What I like is if I can line those two things up together, then I think I've got something that really is a powerful spot. So this weekly doesn't really help me much. I'll switch it down to the daily here, and hopefully it goes back far enough. But we'll go back. Let me go back. I have to go back 2 years to find that price point. So let's go back. Got more than 2 years. So here is that same chart, but I've just switched it down to a daily time frame just to see where there might be an area that I'd be interested in. So that left-hand side of the yellow box, it's the same box still. Notice there's really nothing here other than right as we start to get to, I would say the bottom is going to be about 139.40, right up to the peak there where David was talking about 140. So to me, David's going to shoot for the whole number. I'm probably, if I was long the British pound right now, I would probably get out before it got to 140, simply because it looks like there was already a supply zone there, plus I have the whole number psychology. I'd rather just get out as opposed to try to panic get out if it does act as supply and pushes back down. So that's how I'd be trading that British pound USD. There we go.
There we go. Good.
There we go. The merge of two philosophies in one.
Love it. Yeah.
All right, this one's I think I know your answer to this one, but Thomas said, my neighbor uses moving averages on all his trades. If the trend is up, he buys every time it hits the moving average. Is this a good strategy? David, I know you probably don't like it because of your strategy, but you've learned these different techniques, right?
Yeah.
Does that work?
Yeah, I mean, well, typically moving averages they just become buy areas for a lot of people, a lot of institutions. And I mean, the whole idea with any real trading strategy, the idea of keeping it as simple as you possibly can, it's not necessarily a bad idea. So if he says, hey, listen, this is all I do. Every time it touches a certain moving average, what I attempt to do is buy it. And that's the only thing I'm going to do. And so it's like you have this whole well, if it works this time, it works this time. If it doesn't work this time, it doesn't work this time. But there's no real well, did I do something wrong this time?
Right.
Did I interpret something wrong this time? That's where I feel a lot of traders get into a lot of troubles because they make everything so subjective. And it's like, okay, well, this has to cross with this. And they're adding a million things, more is better. I feel with a lot of, trading and real, trading strategy, I always was in the camp of less is more. And but I mean, moving averages, I mean, they do become, I don't really like to use the word support and resistance because they're like curse words in the world that we've been in for the last few years, but they become, a moving average below you becomes an area of support. It becomes an area of demand, if use the right word, and vice versa on the top side. So, yeah.
Yeah, I think the challenge, who was that? It was from Thomas. Thomas, is it a good strategy? By itself, I would say no. I think there's other factors that you need to consider. What's probably giving him success is if you're using moving average strategy in something that's trending either up or down, and you're buying, let's say it's on an uptrend, and you're buying every time it comes down to that moving average and bounce up, that's great. Everything works until it doesn't, right? The trend is your friend to the bend at the end. And if you have a strong trend, that is phenomenal to use a moving average strategy. But if all of a sudden you have something that goes choppy or sideways, you'll just be literally pull money out of your pockets and throw it away. The other consideration here is what time frame are you talking about? I could torture a chart and take that moving average and fit it perfectly. So I could have it on one chart. It works great on a 20 period moving average. And on the next chart, I have to use a 50. The next chart, I'm using an 18. What time frame is he using for his moving average? Let me give you an example. Let's bring up Tesla, because Tesla's been an absolute ripper. So here's Tesla. Well, which moving average do you decide to use? I think I have, if I'm not mistaken, this should be a 20 and a 50 period moving average on here. Yeah. The blue is the 50, the red's the 20. And if you told yourself that every time it came down to the 20 period moving average, you were going to buy, you know what? You've been doing great. You've been doing great ever since late November. But from August through November, you're getting murdered. It's just back and forth, back and forth, back and forth, chop, 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 chop. What's another good example? In the Forex world, beautiful downtrend is going to be USD JPY. I mean, USD JPY is probably one of the nicest currency trends you're going to see in a long time. Here's the daily of it. And you notice that if you sold short or sold the USD JPY every time it broke above or hit that red moving average, you're also doing great. Why? Because it's trending. So bottom line here is more important the trend, not necessarily the moving average. So I think it's a decent strategy in a trending market. If you've got some crazy volatile stock, it's not going to work. No, there you go.
I can agree with that 100%. And the other thing about looking at moving averages is quite often, I mean, they are lagging. So when you're really getting the true signal, you're not really seeing it at the right time. And when you're looking at past history of moving averages, they look like well, it works every time or it works a lot. But I agree. In a trending market, they do work a lot better as a strategy. But if you're sideways, you are going to get beat up. 100%.
Yeah, I think more important is understanding that there's a moment where you got to go, okay, these moving averages are no longer working for me, or I need to move to a
Right.
different time frame, or instead of being long now, I'll be looking at going short. And that's just the nature of the markets. Right now, things have been, since 2009, except for a couple major drops, it's just been nothing but up. And Tesla's chart reflecting that.
That's what's insane.
It's been absolutely nuts. There was a comment that came through chat here. Let's see. Of course, I gotta find these darn things. There they go. GD says, "What do you think of getting into the Euro NZD?" So I'll bring up that one. You can take a peek at yours as well. EURNZD is the Euro New Zealand dollar, and he's saying at 167.50. I have it on the daily here. I'll zoom out a little bit so you guys can see that. But what's your thoughts on going long that Euro New Zealand dollar at 167.50?
Now, this one, I mean, this currency is a lot like I've been trying to pick bottoms on pound New Zealand, which just hasn't really gone my way. I thought I was going to get some type of, are you looking at my chart or your chart?
Your chart's not on the screen, so I'm looking at mine.
I'll share mine. But 67.50, this sounds like someone who has been in maybe one of my classes before, because that's a price point that I talk about. I haven't really talked about it today, but it's kind of one of these areas that I'm always interested in. Now, I can see just from 67.50, I mean, you can try, these type of buys, and I always can kind of play it. This is like when I play the market 250 pips at a time, it kind of looks something like this. So you have like 67.50, this would be the 70 even, and then 65, which is probably the stronger round figure between the two, 67.50 or 65. I don't really trade with a lot of set orders anymore, where I just kind of have a trade that's just kind of sitting there and waiting. But you're fighting a very, very strong downtrend, and it's tough to pick bottoms. In order for this trade to work out, we would need some type of correction in the stock market, and we're gonna honestly probably need some type of little surprise or some type of new. Who knows what it is? Maybe it's a new development in coronavirus. They do have this mutant coronavirus. Maybe that starts turning people into zombies or something. But
hey, bring it on and make it entertaining. If the world turned into zombies and all of a sudden we could do something with our handguns. I watch Resident Evil. I know what it's all about.
Great show for a long time, man. Yeah, just give me something. But
right.
It's going to take an event. It's going to take some type of negative news, really, somewhere, I think, to kind of turn this thing around. But listen, I'm not opposed to giving it a shot. I like the prices that you're attempting on. I mean, you talk about just traditional. I mean, let me move this. That's a 4 hour. I'm going to move this to maybe daily.
You're just catching a falling knife. I mean, I think that's a danger here, GD. It's you're going against the trend, and again, not that there's anything wrong with that. It's just you got to know that the odds are against you. You're catching something that's moving down aggressively. If it's the right area, and for David, it's going to be whole numbers. For me, I'm actually looking at a demand zone that's just above that 167.50. That's where I would probably take a shot. It's going to be around 168. So just barely in front of you. But they line up, and I think you just got to know your risk and say, if I'm wrong, I have to get out of this because it could drop much further.
Yeah, listen, I've been trying to fight the New Zealand and the Australia trend a little bit. I mean, I've tried to catch some tops on it. It hasn't really worked out for me, but it's just like, you know what? I just got to go with the go. It's like, it's just like fundamentally certain things don't really make sense to me, but you can be right on fundamentals and just be completely too late or too early for something, you know what I mean?
Yep.
So it's tough, in order for me to kind of start buying this again, I would like to see it if it kind of comes into your area and kind of turns around, but this could be another one of those currencies because of how fast New Zealand, I don't know if you're still looking at my screen.
Yep.
Okay. So, but like the way that like a Euro New Zealand and like a Euro pound, these are currencies that you can probably just more focus on. You're going to have to trade kind of bigger picture. You're going to like bigger picture. What I mean by that is like, you're going to have to kind of look to gain more and risk more to trade this pair because of how volatile and how fast this currency pair moves. this is not the type of currency pair that you're trading with like 20 pip stops, 25 pip stops. This currency, look at the spread right now. It's 20 pips.
Whew. Yeah, that's big.
So I know it's like the rollover time, but this is not a currency that you're trading like with the smaller. But I would just look at this one and be like, I'm going to try to trade this dime to nickel, dime to nickel, dime to nickel, 50 pip type stops. I mean, it goes dime to nickel pretty fast whenever the heck it wants to kind of move. You know, these things don't take that long. And this isn't really a currency pair that you want to look at on the day to day, but that's the way I would honestly would play it. I would just focus on I'm focusing more on dimes and nickels on this. That's what I'm doing with the pound New Zealand. I've tried to get into these like little ones in the middle of like these big whole numbers like this, and every time I've done, I'm like, it's going to be. I know I'm not supposed to do it, but I do it anyways. You know what I mean? So like the fact that I'm below 70, either for me to buy it again, get me back above 70, or maybe I'll take a shot at the 65 cents and just kind of see if it cuts through all of that, but.
Yeah, I'd be more inclined myself. I'd be more inclined to, as Lewis in chat says, why not just join the current downtrend, GD? I think it's probably safer for you to look at this and say, okay, if it rallies back up to the 170 mark, as David just had it up there, then I'll be fine to maybe short that and join that downtrend, because that's where the power is on this bad boy, is to the south side. So
it really is. It's really tough. Like. I am a euro, like it's, the euro is a currency that I want to be bullish on as well, kind of going into, the new year. But it's like these commodity currencies have been so hot, and it's hard to just be like, well, surely it can't go, this whole like, surely it can't go lower than this. Surely it can't go lower than this. Surely, it's just.
Don't call me Shirley, David.
Yeah, exactly. But yeah, it's like. If you're wanting to buy the euro, I would probably focus more on buying euro against dollars or buying euro against the Japanese yen. I don't like I'll share this, and then it's like the same thing. Then you have the trend in your friend. If you want to be long euros,
yeah,
you typically it's probably smarter to go with one it's trending upwards against,
Yeah, and aggressively. And I think we all know that, or not know for a fact, but we can see it happening, that our central bankers are going to do whatever they can to keep this dollar as weak as possible. So,
it's wild.
I
did see a rumor when Janet Yellen was selected to run the Treasury. There was rumors and talks and hints that we were going back to a strong dollar policy, or they were encouraging her for a strong dollar policy, which would be interesting to see if anything shifts and changes and any wording. But who knows?
I don't know if I'm buying that one. I think our market, the equity markets, would really not respond well to a rallying strong dollar.
Oh my God, it's crazy. These equity markets are crazy.
Hey, Landis, down in Singapore. Good to see you, my friend. You finally get to join us. It's the crack of dawn over there. David, one other question. Let's see. So we did there was a Canadian dollar. Russ says, can you share your opinion about the USD CAD? One that we didn't get to today, but the Canadian dollar has been another one of those currency pairs that has been just ripping to the south side, predominantly because of the US dollar impact on it. I've got my chart up here, and I'll switch it over to David's in just a second. You can see that percentage swing, the purchasing power loss of the US dollar against the Canadian dollar, since those peaks that we saw back in late March, early April, we were dropped about 13.6% to where we're close today. That's a pretty significant drop. So from a technical perspective, what do you see on it, David?
This is basically just the reverse chart of the New Zealand versus the Australian, or New Zealand versus United States dollar. It's am I showing you my chart?
Yep, I see yours.
So it's you get the same mentality that I've been showing over and over and over again, where it's like, okay, if I go dime to nickel, the next place I feel like, this thing's probably heading towards the 125 mark. This thing is going to just move the opposite of the S&P 500. Whatever the New Zealand dollar is doing against the United States dollar, the Canadian dollar will do against the United States dollar. I kind of look at the Canadian dollar, New Zealand dollar, and the Australian dollar basically as the same. It's the same currency. So if you want to be buying New Zealand against something, you're typically looking to buy CAD. You're looking to buy Australia, because they have the same kind of profile. They kind of typically move up and down together. that's one of the main reasons I don't like to trade them against each other. But, you know, this is going to continue to do most likely what it's going to do until something comes out of left field and then just says, you know what, all of a sudden the market wants to be long dollar again. And the market's only going to be one long dollar again when basically we run out of, the party's over when we run out of punch or whatever. I don't know how to look at it, but this downtrend has no reason to stop until there's some, like, I'm not even looking left. It's hard for me now. It's like the market is doing what it's doing based off of just, it's like, what's going on right now? And you think of just this new transition and, you know, this Fed and this stimulus and all of that. And as long as all of that stuff just keeps coming, there's probably nothing really to the left that's going to kind of just, you know, take whatever's happening and kind of turn around. I hate, it's very difficult to kind of tops and bottoms these days.
Yeah, well, I mean, we know all the not so invisible hand of government just keeps on pushing and pushing and pushing.
That's what it is. Yep. That's what it is. Like, you look at the stock market being at an all-time high, and, you know, I've always kind of, the way I've always looked at it is that if the stock market is at an all-time high, like, are we supposed to feel like we live in the best economy we've ever lived in our entire lives? Shouldn't we feel we all should feel the richest we've ever been? We shall not worry about, like, jobs and all, like, everything should just be like
roaring 20s.
Roaring, dude, like party time. And like, I walk around these streets of, you know, Brooklyn, and everything is shut down. No restaurants, no bars, nothing's open. But stock market's all time high.
Yeah, Great Gatsby. I'm feeling it was a little bit different time than it is today.
It's insane, dude.
All right, David. So what else you got cooking? I know you're doing your signature series, which is kind of a one-off event. Are you teaching any straight forex classes or XLTs or anything for OTA?
Yeah, I have a signature XLT tonight. So I do an XLT, but it's only for the people that take the signature class. That's it's based off of looking for setups and this whole kind of price to price. And so if anybody's ever interested in that, they'd have to join the signature, and it's like my companion session. But my signature class is next year. And, you know, if you're, you know, maybe you want to add new strategies to your year 2021 and just kind of look at the market through a different set of eyes, because a lot of the way that I trade is a lot of momentum based. It's a lot of chasing trends. So when you have trends like this, you know, this whole like kind of extra tools in your belt to kind of chase things higher, chase things lower, you know, might be something to consider. But I'll plug my Twitter as well. I haven't been as active on there lately, if you don't mind putting it in there for me, but at Warner Dollar. But I'm teaching a 5-day Forex class this month as well in Brooklyn. So I'm doing a signature class and the other class.
All right, 1 second. I'm typing it at Warner Dollar.
Warner Dollar, right.
All right, I think I just put it on the screen for the viewers at home. The beauty of doing things on the fly live. That's his Twitter handle. You guys can check out. He doesn't post too much. Got to encourage him to get posting. He's always.
I go through phases, man. Sometimes I get real good, and then I fall off, and then I get good. But I'll 2021, new year, more active.
All right, and he made a little fub there, guys. He said his class starts next year. He meant next week
next week, sorry.
I was going to say, we've got 360 days till his next class.
Read my mind, not my words.
Yeah. All right, Dave. Well, hey, man, thank you so much for coming on today. I appreciate it. I hope that your 2021 is off to a great start, and I know we'll have you again on this program 11 more times this year, so looking forward to it.
Let's do it.
All right, buddy.
For sure.
Thanks so much, man. Take care.
Later, buddy.
See ya.
Bye.
Yeah, that was David Warner giving us some insights into the Brexit to start things off. Obviously, the pound has been looking rather nice. I actually like the British pound US dollar from a relative strength perspective better than the pound Japanese yen, although David says he's more into the pound Japanese yen. Fine, whatever floats your boat. A lot of great comments out there, too, from a lot of the viewers out there. One of the questions or comments that came through was talking about that moving average strategy, and I have to give a shout out to Kevin here. Kevin says it's also important to think about what's his risk, right? If you're buying it, let's say it's on a nice uptrend, and you're looking at, let's bring up that Tesla chart again just because it was beautiful. Hard to believe Tesla's at $755 today. Crazy. Let's go to that one. Okay. So, you know, if you're buying every time it comes down to the moving average on this Tesla, that's great. It's going to work as long as Tesla keeps trending up. It's a no-brainer, right? But the problem is what happens when that ceases to exist? What happens when Tesla breaks down below that moving average and you just bought it because it hit it and now all of a sudden it keeps dropping? You're right, Kevin. It's what's your risk here? Are you going to let it go below that red line by 1%, 2%, 10%, 20%, or are you just going to hold forever? If you're a buy and hold forever kind of person, you might go bankrupt in that process if you're buying every time it comes back down to that moving average. So yeah, I don't think it's a horrible strategy to trade moving averages. I think for me it's more important to use price itself. But remember, moving averages, simply read what price is doing. It's trending up, therefore that line will be moving to the upside. So there you go. I wanted to get that comment in there. Also, Christy says, 0 is a number too. Yes, I know 1 used to be the loneliest number, as Medic Man Down says. 0 is the loneliest number. But hey, it's all just numbers here. If we haven't learned anything from 2020, probably my biggest takeaway, maybe that's the show I should have done. What are the biggest takeaways from 2020? The single greatest, I'm curious what you guys think out there too. I'll wrap this show up here in just a minute. But what was your, if you could write it in 1 sentence or 2 sentences, what was your biggest takeaway from 2020? I'm curious to see what you guys think. Of course, now it might not have many people left in the audience. I'll tell you mine. The biggest takeaway I had from 2020 was a disruption of my belief system. My belief system in the financial markets has always been the lowest that any price can go is 0. 0 is the floor. It's the absolute floor. Now, I could lose more than I had invested if I was using margin, but price can only go down to 0. That was shattered, of course, in April of 2020 when we saw crude oil trade in the negative, and not just negative $5 or $10 or $20. I think it was, what was it? I think it was negative $40 a barrel, if I'm not mistaken. It was something ridiculous like that. I think I have a picture of it somewhere. That was probably the biggest takeaway. I still am in disbelief that happened back in April, but it happened, and that was my big thing. All right, what else do we have here? Biggest takeaways, don't believe politician. That was really just from 2020, Lewis. I've been a voting member of the United States since I was registered to vote. I'll make sure I vote every election. I don't trust any politician from the time that I was a youngster. That one's bewilderment. Trade a larger time frame and be patient. That's a great one. That's a great takeaway there, and it that helps you out a lot, doesn't it, Medic? You get if you look at the bigger time frames, you see where things have come from, the big picture. You don't get wrapped up in the small little details which usually jig you out or just torture you. You go a longer time frame, you're more relaxed, more calm, and you can grab those bigger moves. Bob Dunn, who is really about the bigger moves, riding the big waves, he'll be on the program. I believe Bob is going to be on next. I think he's going to be on next Thursday. All right. Christy says, "Don't jinx it. Do you mean SPY can go negative?" Yeah. Christy, if SPY goes negative, if the S&P 500 goes negative, then we have a serious crisis. I mean, that to me would be like a nuclear bomb fell in New York or something, like a literal nuclear bomb to get the S&P to go negative. I just don't think that's possible. But hey, I didn't think crude oil could go that low either. What else? Never fight the Fed. Yeah, Landis, the Fed. If I have one enemy this year, it's the Fed. They kicked my butt in 2020, but you know what? I took a shot at it, had a plan. It just didn't quite work out for me. Well, how vast voter fraud is. Look, voter fraud, and again, we won't go political here, but remember, voter fraud is happening on both sides of the aisle. There are people who are taking dead people's ballots and voting for Democrats. There's people taking dead people's ballots and voting for Republicans. Is there enough to change the election as it stands in our current system? Look, until some hard evidence is actually brought to light and proved in a court, to me, it's not that big of a deal. Patience is critical, Greg. First and foremost, right? Well, I think risk management is probably first and foremost, but patience is a difficult thing for people to get used to. I told you when I started off, I'm a very fast-paced person. My speech probably still, even though I'm much older now, is still a challenge for people to grab what I'm saying because I talk so quickly. My trading style has had to kind of slow down a little bit just to as Medic says, to kind of keep me from making bad trades, to keep me grounded. And patience is definitely one of the hardest things to do. What I would encourage everyone to do to help with that patience aspect is write their trades down. Because if you write all the numbers down, you say, here's my entry, my stop loss, and my target. And don't just say it, write it down. Well, then you will be less inclined to be antsy, to jump the gun on something. You can actually sit there and say, I'll wait for it to get here, and I'm not going to rush it or jump the gun. What are you guys talking about? All-time highs in markets, but people are still struggling. Yeah. I know, Jonathan. It's a weird one. Hey, not everybody's struggling. Let's say that. There are a lot of people doing rather well. I would say that those who are not invested in the financial markets are struggling much, much more than those who have something in the markets. GD, that was today. I actually really do agree. I dislike Mitch McConnell like nobody's business. I think that he's just horrible, but whatever. That's my opinion. But what he said today, I think, was very true. I agree with him 100%, that if we don't go with what the election process has shown us, then we do a disservice to democracy as a whole. All right. I take everyone's comments seriously, Steve, and I do my best to try not to offend anybody. That's the biggest challenge, is trying to be PC. I need a let's see. What else do I have here? Greg is right. Red or blue, they both screw you. That's even poetic, you know? And I wish we had like a 5-party system. Give us more to choose from. It's hard to believe that out of 330 plus million people, that those are the 2 candidates that we had to choose from. Those are the 2 best people, the most knowledgeable people that are going to drive our car. I just find that remarkable that that's what we had to choose from. But it is what it is. So no need to be angry about it. Let's just move forward and do the best we can to grow our own personal wealth in whatever situation and be amicable to those who don't agree with you. We don't have to agree. It's all rigged, Ivsy says. I would agree. I think it is rigged myself. But you know what? And nothing I can do to change it. I can vote. That's all I can really do. All right, let me show you your economic announcements or economic calendar for tomorrow. And of course, I don't think I changed the date on this bad boy. That's a beauty of me trying to do things live again and moving too quickly. Let's change that, and I will do my best to. Where is it here? This is for the 7th. Now, you can see there's a lot of stuff coming out for the European Union tomorrow, and that will obviously be one of the major drivers. You see the euro going around doing well. There you go. Change the date. Euro having a nice move today. There is a lot of stuff for the euro. Now, again, it's some of the countries that aren't that influential, like Italy, but you have Spain, France, Germany, all reporting services PMI numbers, and this is actually today's numbers. Why am I looking at this? This is today. Get out of here, Merlin. I'm sitting there. I know those numbers came out, and all those numbers actually came in line. They were pretty much unaltered from that screen. They're right in line with expectations, but I have the wrong number up there. So let me see if I can bring up your economic calendar for tomorrow, because I just didn't load it up. There it is. I knew we had British pound tomorrow. Okay, so there you go. There's your announcements for tomorrow. Sorry. This is the 7th. Retail sales. That's what I thought was coming. I knew there's something bigger for the euro. Retail sales, and they're expecting it to go negative. Now, they've been positive for a couple months. Now they're looking at it going from 1.5% to potentially negative 3.4%. Again, reflecting a slowdown and more lockdowns going on because of COVID. U.S. has unemployment claims and trade balance. We also have natural gas storage, and that is pretty much it. Late night tomorrow night, you'll see the Germans reporting industrial production and trade balance, and I still believe that Germany is the fulcrum of the European Union, so any weakness there could reflect through to that euro. Greg says, Merlin for president 2024. A couple things. Number one, I can't be president. It would be illegal for me to be president because I was not born in the United States. And number two, there's no way in hell I would want to do that. I actually thought it'd be nice to be a politician, but I think I would go nuts being a politician because I would probably be standing up there every day going, why can we not agree to do something? We were elected to do this job, and you want to disagree with me just because I have a blue shirt on or a red shirt on. I think that that's just stupid. It's not what's for the betterment of my country. It seems like what's betterment for each individual person and their agenda, which drives me nuts. All right. Big Ed says, now that the Senate is Democratic, cannabis stocks will soar. I think you're absolutely right. And we talked about this on the election show. We'll just bring up MJ here, which has been doing rather well. And you can see the jump it had today. Beautiful move up today, right? You've ripped up from 15. It broke over 17 today. Now, the key here is what's that long-term trend? So let me go to a weekly, which will give you a little bit better picture of the MJ. And you guys, I know I have some supporters here that will agree with me and say, yes, I did say this, but you guys remember me saying all this whole sell-off back here in 2019, if you're watching Power Trading Radio, it was, look, it's on a downtrend. I love the industry. I love the sector, but the trend is your friend to the bend at the end. Now, we never really started to make a new high, but when we made this new low over a higher low in October of last year, I was like, you know what? I am feeling much more positive. It hasn't made a new low. And now we broke above these highs that we experienced back in June of 2020. To me, this is a great sign that this trend is now reversed and potentially now moving up to the north side. So I think we could get much more upside movement here for MJ, especially if we get the word that they're going to legalize on a federal level cannabis and related industries. My goodness, this thing will be back up at $40 in no time. So anyway, there you go. 420 Medic, that's great. 420 for 2020. Well, we had to put the 2021 in there. I think that would be it. Russ, I was actually born in Germany. Yes, I was born in Munich, Germany. My dad was a hippie traveling around the world, and my mom was there going, hello, you have a nice BMW motorcycle? I would like to ride on that. So there we go. Rest is history. But I've been in America since I was 4 years old, three or four. But I'm an American at heart. All right. I think that's going to do it for me for today. Tomorrow's show, boy, I got so many things happening this week. Sometimes I forget exactly what we've got going on. I managed to book, you guys have asked for specific guests, and I did my best to accommodate that and bring on different guests. So if you go to TraderMerlin.com, I updated the calendar there, so that should be good for about the next 2 weeks. The only day that I have open is next Monday. Tomorrow, I'm going to have Tim Blotzer on the program. You guys have asked about the rubber ducky. So we'll talk about his shorter-term day trading of options, which is what Tim does. He also does other types of trading. But we'll bring him on, talk about options. So if you have some specific options questions, bring those through to tomorrow's show. Again, if you like the program today, if you like what David Warner talked about, you can always help me out by clicking that thumbs up button. If you're new to the program, as I know I've got a few newbies, click that subscribe button. And I will see everybody tomorrow with Tim Blotzer talking options. Take care, everyone.